Good morning. My name is Jeffrey Schneider. I am an enrolled agent and a certified tax resolution specialist. Well, today is Friday, February 9th, and you know at midnight last night, the 8th, Congress had a momentarily shut down, but Congress then decided to pass an extension of the budget, and President Trump, though has yet to sign it, will sign it. However, in conjunction to that, there were some extensions of some of the provisions of the tax code that expired at the end of 16 that we thought we couldn't take as deductions or some exclusions. So I'm going to read about 3 or 4 of them right now to tell you what has been extended and that will be beneficial to us. First of all, there's been an extension and modification of the exclusion from gross income of the discharge of certain mortgages indebtedness. So if you have a principal residence and you were discharged or had cancellation of debt under Section 108, there was an exclusion that expired. You now have the exclusion. This provision extends through the end of this year, unless they decide to extend it again. That exclusion from your gross income of the discharge of your principal residence mortgages. This provision also modifies that exclusion to apply pursuant to a binding contract prior in 2017. So if you had a mortgage that was canceled, depending on circumstances, you can exclude it. Number 2 is there was the mortgage insurance premiums. That means that if you took out a mortgage where you put less than 20% down, the mortgage company subjected you to a extra payment every month. You were able to deduct that. Well, that expired also at the end of 16. Well, they extended that. So it says the provision extends through 17 the treatment of qualified mortgage insurance premiums as interest for purposes of the mortgage interest deduction. And that follows through the remainder of the mortgage interest rules. The third one I'm talking about is tuition fees deduction. If you have college expenses, you have one of 3 ways of taking college expenses. 2 of them are credits. One's called the lifetime earning credit. The big one is called the American Opportunity Credit, and the third one is the tuition and fees deduction. And you take a choice which one you want depending upon your income levels, because there are income limitations to each one of those credits, and same thing with the tuition and fees deduction. So it says that it was extended through 2017. It's an above the line deduction, so it's not a credit, which means it's on the front page of your 1040, and the deductions is limited to $4,000 whose adjusted gross income does not exceed $65,000 for a single, $130,000 for a joint filer, and $2,000 for an individual whose AGI does not exceed $80,000 or $160,000. So there's limitations, but at least they brought it back. Other ones has to do with the energy credits. There are things related to if you have a racehorse, you now can depreciate your racehorse over 3 years. That was an extension. So just be careful, check with your tax professional if you have these things when you thought you couldn't deduct them anymore, but now you can, at least for this year. In 2018, everything changes anyway. So until next time, see you.